Good morning. Welcome to the RIU Resurgence 2021. It's been a strange year, isn't it, really? No one knows what's going on. One day we're here, we're stuck here, we can't go anywhere, then we're going, then we're back. Anyway, we're here today, and that's the main thing. As you saw by that last bit, it's also the Vertical Events RIU 200th conference. The first started back in Melbourne in the year 2000. So it's been a long journey. We're very pleased to be here today. I guess I'll start at the start, and that's thanking our sponsors. And obviously with RIU Resurgence, it's Argonaut. I see the great man Eddie Rigg is in the building, which is fantastic, and he'll give you a brief shortly. Argonaut have been a great supporter of ours over many, many years. We have TerraSearch and Lind. Lind have been a great sponsor, TerraSearch. Sequent, that's a new one to us, so we welcome them on board. EBM Insurance, not sure who your insurance broker is, but EBM are the sponsor here. Probably the most important one for the day is the coffee sponsor, and that's Gilbert and Tobin. So to Claire and her team, thank you very much. CSA Global, Mets, Max Geo. Also on the technical auditorium today, we have Geoscience Australia and the Government of South Australia. And of course, we have our normal supporters and sponsors. I'm not going to say too much today because Eddie's going to have that honour with the battery minerals. Apart from that, you may have seen outside, there's a few security guards floating around. And the reason they are here is because of Venture Minerals. Now, Andrew's talking at, I think it's 10:30 this morning. And recently in Noosa, the protesters from protesting against mining in Tasmania managed to get in, as a phone there I just heard, they just managed to get into the venue and disturb it. And yesterday at their AGM, they had a presence. So we're just taking some precautions in case they decide to target us today. Now I can see Liesl down the back from the venue, but she's given me a little buzzer. So if any of you in the room here today have snuck in without us knowing, dressed in your suit and tie and are a protester, just think of this. I've got a buzzer that locks the doors and you'll be locked in with us. And you may not want that. So if you are a protester in the room now, just have a very, very careful think about that because it's not going to end well for you. It's now my duty to hand over to the great Jerry Gannon, the MC for the next 2 days. He will take you through all of the housekeeping, the welcome to country. He'll do all that. And we look forward to a great day and we look forward to a great night tonight. So I hope you're staying over and having a beer with us tonight to celebrate our 200th event. So thank you one and all, and we'll see you around during the day. Thank you.
Thank you, Stewart. And we thank you, Stewart. Again, I thank you, Stewart. Okay. Nope. Two. Okay.
This one works. Okay. Good morning, ladies and gentlemen. Let me firstly acknowledge the traditional owners of these lands on which we meet and pay our respects to their elders past, present, and emerging. Now, we begin this morning with a presentation entitled The Sustainable Energy Revolution. Eddie Rigg is a co-founder of Argonaut and is its executive chairman. He has extensive experience in the execution of M&A and capital raisings for both public and private companies, and he's an active originator of domestic and cross-border transactions for small cap through to large multinational entities and SOEs, predominantly in the metals and mining energy sectors. Prior to establishing Argonaut, Eddie was an executive director, investment banking of CIBC World Markets, the global investment bank. Eddie is a 40 under 40 and City of Perth Business Award winner. Please welcome along, Eddie.
Thanks, Jerry. Normally the microphone doesn't work for me, so I'm for a change, hopefully everything works today. Thank you to Stewie, to Jackson, to the opportunity to present at the RIU conference. My talk is obviously very topical, sustainable energy revolution, or it's an energy revolution, and we believe it's sustainable is here to stay. So I'll just, this slide here, people might have seen me table this before, but these are the 10 energy metals, which are commonly called the battery metals. And it's part of the energy transition whereby it's addressing the global warming by reducing our carbon footprint. These new world metals are critical for the green energy transition, from basically fossil fuels across to EVs and renewables. What's interesting about this slide is, you know, when we see the market, and it's quite always surprised me, but copper is the king, and I'll talk about copper today. But the copper market is in 2020 about $130 billion worth of copper ore was produced and sold into different refiners. To give you some context, lithium, which gets a lot of attention, SC6 was the spodumene, 6% spodumene concentrate, which we sort of sell out of WA. The total market for that globally was 1.8 billion, or about 1.5% of the copper market. Even on a lithium carbonate basis, which has been upgraded, still only 2.9 billion. Just shows you how small the lithium market is vis-a-vis copper and the importance of copper. This is a slide I always do, and I like to thank Ali Gelvitis, who sits next to me and typically makes me look all right in these sort of presentations by doing these slides. But this is a slide updated as of yesterday, showing the performance of New World in the blue and grey old world metals. And you can see this year it's been a pretty amazing year for the new worlds. If you went back last year, 2020, the old world metals were actually a better performance. The interesting correlation on this one here is that to have a strong for the new age metals, you actually need strong prices typically for the oil, gas. I hashed there, importantly, I've hashed on this table uranium, which is regarded as an old world metal, but you know, clearly, I think any sensible person believes it's an important part of the future in reducing our carbon footprint. This slide, I like this slide, and I'll talk a bit about the companies here today. But what this slide shows is, if you put 10,000 bucks in the start of this year in the small resource index, you'd be up about 18%. Copper and nickel are up around 22, 24%, 26%. And as a commodity, and our bellwether group, which is Oz Minerals, Sandfire, and Western Areas, that's the sort of bellwether group we use, they're up a combined 22%. So they've basically performed in line with the commodity prices, which is a bit surprising thinking about this, because normally equities and the better performing equity stocks outperform commodity prices. And interesting, we jump across to lithium, which is a green slide, and lithium's up for the year 325%, but our bellwether group of Pilbara Minerals, Liontown, and IGO are only up 250%. If we went back 3 months ago, it actually was inverted, so the other way around, where the lithium stocks had massively outperformed the lithium price. So typically, you know, normally equities do outperform and go earlier than the commodity prices. And we do see either two things happen: either the commodity price picks up or the stocks drop. But thankfully, in this situation, the lithium price has gone up and it continues to sort of head north. Uranium's a really interesting one. So uranium is where lithium was 3 months ago. Uranium's only up 44% for the year, but our bellwether group is up 204%. Our bellwether group's NextGen, which we highly regard, and it's a great client of Argonaut, Boss and Paladin. So those companies are up combined 204% across those companies, whereas the uranium price is only up 44%. If you're a new world companies, the new world commodities are up 73% for the year, and then the old worlds are up about 24% for the year. Just interesting, we actually did an analysis of every company here. We did the same analysis, and the companies all here in aggregate are up only 6%. So quite interesting. And that reflects that the companies here are right across the spectrum. And if you go to the slide before, you'll see it on there that gold, which is the biggest part of expenditure and exploration in Australia, is flat for the year. So that typically reflects why we have only an average performing of the companies here today. I think most people have seen different variations on this slide, and what it shows is that battery demand, which is all about electrification, is a 5-fold increase over the next 10 years. And on the right side there shows the different commodities, and copper's there. Aluminium is interesting. Aluminium is a big part of the future, making vehicles lighter, and also some forms of conductivity, electricity. We don't often talk about aluminium as an EV, but it really does, is going to play an important role going forward. As I mentioned, copper is the king, and if you look at all the green energy transition, or the move away from fossils to the new modern the metals and the new forms of energy, we see that copper plays a massive role in solar, wind, bioenergy, electricity networks, which is a very big part of it, and of course EV and electric vehicles and electric vehicle batteries. And it's the major player. So it's an amazing sort of commodity. It's the one which we like the best, but it's really hard to find in Australia. There goes the other types of commodities there. You see nickel, it's going to play a very big part in battery metals, but not so much in other forms of power generation. Zinc plays a big part in wind, and aluminium plays a big part in solar with the solar panels. This is a slide which really sort of makes us sit back and think. So far, copper, has primarily been used in electrical networks, and you see the dark blue there, and you can see that's the use of copper, and that is predominantly a very major place in the whole energy space or electrification. But going forward, by 2030, there'll be more copper. You see how much copper is used in power lines. There's going to be more copper, substantially more copper used in batteries going forward and EV cars. So you can see the transformation there. This is a really good slide which people bring out regularly, and what it shows is that there's 25 kilos of copper used in a typical internal combustion engine. For a hybrid electrical vehicle, 42 kilos, a plug-in hybrid, 61, and up to 94 kilos in a full battery vehicle, the old Tesla. So you see the massive increase in copper used going forward. And if you go back to those other slides, what was driving copper use is passenger vehicles. And you see there by 2025, there'll be more copper used in the hybrid or the electric vehicle type versus the internal combustion. And that's a real turning point. This is an important slide. There's a number of companies here are looking for nickel, and the future for nickel is just absolutely, in our view, wonderful as well. Virtually all the battery chemistry show there's an increasing amount of nickel being used. And what the slide shows is a typical use of nickel has been stainless steel, the main use of it. But we see over the next 10 years, the amount of nickel used in stainless steel will reduce. But the amount of nickel used in batteries will be a 500% increase, which leads to an overall use of nickel. And this is particularly nickel sulfate and nickel sulfide. So I think we'll see a differential in pricing between nickel sulfide and nickel laterites. I think we all know there's plenty of graphs. This is a slide we borrowed from Independence, showing that there's an increasing deficit in lithium supply. Lithium is a very common metal, but getting it out and producing it at the rate it needs to happen is proving to be more of a challenge. Massive lithium deficit out by 2030 can only be positive for the lithium price, and there's no other metal you can swap out for lithium and lithium-ion batteries, hence why they're called lithium-ion batteries, I suppose. This slide's an interesting slide. It shows the former form of electrification, which was coal. And basically, this is by the EIA, Independent Energy Association, International Energy Association, which predicts by 2040, the battery metals will have the same involvement and contribution in electrification as coal does today. So, and that's why it's here to stay. Interesting slide, and for people in the room who are not just on EV or battery metals, the slide, the funny one there looks like a mat or something rather, is just showing you the different spend, the total spend and how it's split between commodities. The yellow is the gold, the orange is iron ore, the grey sort of colour is the coal, blue is other, and down below is sort of nickel and copper. And what it shows you, you know, back in the early 2000s, it was gold, and then the middle of the year, it was middle of the 2010, thereabouts, that boom we went through was all about iron ore and coal, and now it's gold. Interesting enough, the battery metal spend hasn't really risen as what we thought it might. But this is Argonaut's interpretation of where CapEx is going to go, and it shows you back from 2001 up to 2030, the first decade really driven by iron ore and coal being the red and black. The last sort of 10 years really driven by gold in the yellow, and our view is going forward, it's energy metals, as there's only one way we're going to supply the materials required to electrification and our move to decarbonising this world we live in. This is an important slide, and it's good to see our managing director here, Glenn Colgan, because you know, hydrogen is really difficult. You can't have this discussion about electrification and the evolution towards away from fossil fuels without talking about hydrogen. Perhaps Twiggy's the right person to talk about this, but we sort of know what green hydrocarbon is. You know, it's producing hydrocarbon from renewables and using a safe water source. Blue, we sort of know it's taking methane and splitting the hydrogen from the carbon dioxide and then sequestering it. You know, some of the other ones, you know, there's grey, there's yellow, there's pink. And I said to Glenn, what's pink? And I don't know if many people know what pink hydrogen is. It's all a bit new to me, but he explained quite clearly to me that it's hydrogen produced from companies with the majority of the board are females. I'm not always sure that's right, but I'll accept that. Just in the last little bit here, just want to talk about what's causing this. And this is the stimulus. This is a slide borrowed from Tribeca, and it shows you the stimulus on the right-hand side there since COVID's come into play. The GFC shown on the left-hand side, you can see the massive increase in stimulus. And what does stimulus do? It's great for commodity prices. This is a CPI of 2 years after the GFC in the blue, and the orange is the CPI since March 2020, I think it is, March 20, when the first stimulus came in after COVID. And it shows we've got a fair way to go in terms of commodity prices, which is reflected in this slide here. And on the light blue is the 2-year performance of commodities after GFC, and the dark blue is the performance of those commodity prices in the period so far, the 21 months after we started getting COVID stimulus. And it just shows you the increase in commodity prices still available. We're a great believer at Argonaut that this cycle is going to be far longer than previous cycles, which can be a bit boom and bust. And our reasons for it, and it's the reasons which I think most people accept, is that COVID's caused a dampening on supply response. And that's a big thing. We can't get people, we can't get availability, disruption in logistics. We're also seeing that the approval process and all the various ESG charges and challenges mean they're getting mines approved, and particularly after in Australia, after Jill and Gorge, you know, trying to get things approved now, what might have taken 6 months will take 2 years or more. There's also southern risks, increasing southern risks around the world. And of course, ore bodies are more commonly now blind. So it takes a lot more to discover these ore bodies. So we believe this cycle is a much elongated cycle, and it's great for everyone in this room. Sort of finish off by just acknowledging the expertise at Argonaut. We're blessed to have 5 geologists, my engineer, and metallurgist on staff. It gives us a competitive advantage, what we believe. And the other thing which people might be aware of, just as a self-promotion, is that we do now have our own funds management business run by David Franklin and Jenna Converse. And they've run this fund that started in January 2020. It's very much top-down and bottom-up approach. Top-down is they work out what commodities they want to be exposed to. It's a resources, as you imagine, it's an Argonaut Natural Resources Fund. And so far, David's allocating 40 to 60% in energy transition stocks, which we've been talking about today, 20% in gold, and other things zero, cash and other things 0 to 40. And then he does a bottom-up approach where he goes through and does various bottom-up analysis, relying on the expertise of the people I showed before, plus a couple of senior dealers like Glenn. And then he comes up with these stocks. And what's interesting is that since inception, it's up 111% versus the equivalent index, which is down 7.1%. And as I talked back before at the start of this presentation, this has outperformed everything but pretty much lithium and uranium, right? So the guys did an amazing job. And if you do want to put some money to work, go and see Dave Franklin and Jenna Converse at our office, because this is a business which we want to be part of. Thank you, Jerry. I'm actually on time for a change. So I really appreciate the opportunity of presenting to everyone. I hope there was some benefit from my talk today. Thank you.
Thank you, Eddie. We have plenty of space up the front here. The back of the auditorium is beginning to resemble an Irish Catholic church before last Mass. So move up, plenty of space, we move up. Battery Minerals is currently advancing its stably stalled copper gold project in Victoria and the Russell's copper project in WA. With us today is the Executive Chairman, Mr. David Flanagan, to share with us the latest update on these projects. Welcome along, David.
Terrific. No, thanks very much for the opportunity to speak here. It's a cracking conference. Stu and your team do a great job. So I'm here to talk about battery minerals. We love battery minerals. I'm going to talk about three things: one deal, two projects, and then what we're going to do next. And we're busy. So Battery Minerals had an amazing graphite project in Mozambique, which we still have. We could produce somewhere between 3 and 5% of the world's graphite demand for 80 years. Great project, at the bottom of the quartile. But right now, China controls 100% of the world's graphite production, and you can't run a rechargeable battery without graphite. You can't drive a Tesla, you can't use a mobile phone, you can't fly the F-45 Joint Strike Fighter. So the US strategic military devices that require rechargeable lithium-ion batteries all rely on access to graphite processed in China. It's a tough market. So for us to maximize the profit out of that graphite project, you either take on a partner which accesses the majority of your downstream processing value that you create, or you go and access your capital at a very high cost and blow out your capital structure, or you find a partner that's competitive with China. So what we've done is we've divested our graphite project into Tirupati Graphite for $12.5 million in cash and shares. We'll be their second biggest shareholder. That deal will complete early next year. And those guys are currently producing graphite, making 50% margins, and they're growing their current graphite production to 80,000 tonnes. They are competitive with China, they are making money, and they will fund the development and growth of that project. So we've made batteries out of our graphite. We've made all sorts of industrial products. It works beautifully. And that's how we're going to participate in that market. Following on from that, we've gone and bought a copper gold project in Victoria. And is Chris Cairns in the room? I could just about give Chris Cairns a big kiss. He's fantastic. He's made a wonderful copper discovery in the Staveley Belt in Victoria. And we've been able to acquire 720 square kilometres of ground north of him, where there's been no exploration for 30 years. There's been 100,000 ounces of gold production, and there's 25 kilometres strike of the same rocks that hold his copper project. So I'm going to talk about that now. So this is it. So this, as you'll see in most of the presentations today, red is really good. And this black line is really good. It's also important that the Stawell gold mines here, they produced about 5 million ounces of gold. There's Chris's copper projects in here. And this is the recent discovery made by the guys at Navarre at Morningville. And we've got all of this ground here. And it's sat there locked up since the 90s, when the gold price in US dollars had a 3 at the front of it. So since people have been in here and explored, we've basically developed air core drilling technology, open pit mining technology, leg stream soil samples, and the gold price has appreciated 500%. The copper price has gone completely through the roof. We've seen the development of Cadia in New South Wales, where because of copper credits, they're making 1 million ounces of gold each year for less than $40 an ounce. And that geology runs south. It doesn't stop at the Victorian border. There's been a massive influx of exploration activity in Victoria. We're part of it. There's been lots of success in that part of the world. And we're in there right now having a red hot crack. We acquired this project last year. We got on the ground here in May. We've drilled about 190 holes since then. We've flown 200 meter spaced gravity. We've compiled worldview, all sorts of detailed LiDAR, and we've gone in and we're drilling things now that have never been drilled. You know, you look at all the gold projects that have been found and the copper projects that have been found, the first thing you do is you go and drill where the workings are. Well, that hasn't been done. And it's just a beautiful part of the world. That's a zoom in on that area. A part of the discovery of the Staveley deposit has been the reinterpretation of the geology in this part of the world. And a fellow called Ross Cayley, who ultimately Chris has named that copper project after Ross, the Cayley lode. He was central with the Geoscience Australia and the Victorian Geo Survey in reinterpreting the geology of this part of the world and confirming that this geology, the orange, is part of the same sequence that hosts those other copper deposits. But again, this one hasn't been drilled. What has been done in our tenement is there's been about 75,000 ounces of gold mined here, about 20,000 ounces of gold mined here. There's been about 12 holes drilled to an average depth of 30 meters, 12 holes over that 25 kilometers strike, and 1,000 holes drilled along here over the last 100 years. So again, we like the belt. This is part of the processed mag that we've put together, just to sort of, this is a few of the old historical data points we put together. Again, there's a few hits along here, which we're following up. Again, only shallow holes that have been drilled there. And this is the area we think is prospective for copper and nickel. The guys at Navarre have made a discovery down here called Morning Bill. There's a circular feature, an intrusive inside those volcanics, quite large looking thing with intercepts of alteration over 300 meters with silver and sniffs of copper and gold all through here. And then we've got a similar circular feature, we believe, along strike in the Staveley volcanics on our side of the tenement. And we've just finished drilling here for the first time. So we've just finished drilling 47 holes here in the last week. And unfortunately, the results take a couple of months to come through, but we look forward to seeing those results. And the rig's now moved. It'll be back up in here drilling. We'll finish up in here about the 17th of December. Another shot. I'm not going to go through the detail of this, but all of this is the new gravity data. Another thing, the guys at Staveley and Navarre and the Stawell Gold Mine and North Stawell, they are just, it's not like working in the iron ore industry in the Pilbara. Everyone here has been welcoming. Everyone in here has been really welcoming. They share data. We talk about all the ore systems. We talk about what techniques we can use to make discoveries. And again, the Staveley Minerals guys have been fantastic. And gravity is a very important tool in identifying the important structures in the important rock types and focusing our drilling and finding something significant. So these are the holes that we've just drilled, and you'll see that the volcanics runs all the way through here, and there was drilling here and here and here, and that's it. We're in here, we've just drilled that, and we're going up to drill these other black holes over the course of the next weeks and months. Another project we've got, through my dealings in other companies that I've worked in the last 30 years, I've got to know a few Aboriginal people. Up here, back in the 90s, a company went in and drilled 13 holes in the Halls Creek tectonic zone into an ultramafic rock. In those 13 holes, every single hole got better than 0.2% copper. The best intercept was 1 meter at 0.5% copper. There was logged nickel sulfides in those holes. There was outcropping gossan all through it. The company that drilled the holes ended up in a big fight with another company, as sometimes happened, and the tenement fell over. Aboriginal group picked up the ground. And it turned out that I've had some dealings with that Aboriginal group, and they picked up the phone and rang me and said, do you want to do a deal? We'll do a deal on this tenement, and it comes with a land access agreement. So we did a deal, and they're now top 10 shareholder in Battery Minerals. And we've got this ground in here right next to the Savannah nickel mine, along strike from a bunch of other stuff, the Argonaut diamond mine. And there's an interpreted massive gravity high that sits under here, which we hope has been pumping all sorts of mineralized fluids into the fault and onto our ground. Now, on our ground that we own in here, it's not just sniffs of nickel and sniffs of copper. We've got lumps of copper outcropping here. So in addition to having malachite all through the area and 100 ppm copper soils, we have lumps of native copper. And native copper is a very good indicator of copper. This is a zoom in on the area. After the drilling was done, there has been no more drilling done on the whole tenement. We've done rock chip sampling and soil sampling and got results up to 30% copper, 25 kilometers from an existing mine. There's nickel that's been hit in this drilling, and no one has been back here. It's been locked up. So again, it comes with a land access agreement, and we went up there straight away with a helicopter and flew 400 meter deep penetrating EM to have a crack at this whole, the 16-kilometer trend of where there's all this copper in soils. And you know, if you see a lump of copper sticking out of the ground, it's quite a beautiful thing. And we came up with these 3 targets. Azura, this is where they went and drilled the 13 holes before, and Epithermal and Trem Jones, we went and we think we found something exciting in the EM. So this is the first one here. If any of you guys like going fishing and you've got an echo sounder in the boat, that is a bloody big fish. Okay. We call that epithermal. That's this thing down here. It's about 600 meters long. And then this one here is called Trem Jones. Now, I've gone exploring for graphite before and I found it. In here, yes, we're in sediments, but the sediments are intruded by ultramafic rocks. They've got wonderful geochemistry. There's olivine textures that have been identified in the drilling. There's nickel sulfides there. It just didn't magically appear in isolation. We think it's linked to the sediments down here associated with these EM conductors. There's no logged or mapped graphite in the area. The geophysicists who did this work for us rank it in the best 5% of targets they've seen in their career. So we've started meetings with the native title group to get up here and drill this. And we're not going to die wondering. I'll give you the tip. So look, in short, we think we've done a fantastic deal with Tirupati on the graphite project. Shareholders approved it at the end of September. We're going through the transfer of those assets now. All the paper is going to be documented and logged with the Mozambique government, should complete early next year. We're going to go in and drill the hell out of the Staveley area. We're getting lots of really good access onto the ground, lots of great engagement from our neighbours. And again, we've got that wonderful project up there at Russell's in the Kimberley. Please go look for the video that I've put on LinkedIn. It could be the best 7 minutes that you spend today. And take a good look at us. We think we're a good investment. Thanks very much.
Anax Metals is developing a sustainable copper project in the Pilbara with gold and PGM exploration. We welcome Anax Metals MD Geoff Laing to the podium.
Well, good morning and a very warm welcome. And I'm very pleased to be here this morning telling you the Anax story. We'll be following on from a lot of what Eddie talked about. We're certainly all about copper and zinc, and our focus is near-term copper production. So without further ado, so just a quick take on the project before I get into the detail of how we are delivering the leveraged outcomes that we are. The Wim Creek Copper Project, we're looking forward to near-term sustainable copper production. So West Australian copper production. We acquired an 80% interest in the project from the then VentureX, which is now Develop Global. The remaining 20% is still held by Develop. So it's an 80-20 joint venture. We're aiming to get into copper production within the next 18 months. We acquired a resource base of about 10 million tons at 1% copper, 2% zinc, and just under 0.5% lead. We've completed a scoping study, and that study has defined a 6-year mine life, producing about 10,000 ton a year of copper equivalent, so mainly copper and zinc. And we expect that the copper will deliver around 200 million in free cash, and importantly, a low capital cost development of 52 million. I won't dwell too much on the macro aspects of the copper market because Eddie's obviously covered off on that in detail. We are obviously strong supporters of the copper demand growth story, and of course zinc as well. What I do want to talk a little bit about though is the near-term production of copper. So I just want to highlight that going from discovery through to a producing mine typically takes between 5 and 15 years, depending on the scale of the project and the complexity of that project. And we've seen an opportunity where we can, using some smart technology, a combination of technologies, we can monetize what we call stranded assets, assets that are advanced, being defined, and using the right mix of technologies, one's able to bring those to an economic state. So just looking at the map of Australia, you can see in the dark blue circles are operating copper mines. The light blue circles are deposits, defined deposits, and deposits that haven't yet been developed. Some of those are stranded assets, and our Wim Creek project is a classic example of that. It didn't have the scale to justify the capital development costs, but with the application of the right technologies, that can be completely changed. And I hope by the end of this presentation, you'll have a better understanding of how we're going to do that. But you can see Australia is absolutely peppered with with deposits, undeveloped deposits. And some of those will certainly be brought into production through the application of some of the technologies that we're looking at. So the Anax strategy has 3 key elements to it. The first one is delivering highly leveraged outcomes through the integration of technology, particularly particle sorting technology, to advance stranded assets. And we are rolling that out at Wim Creek. We've delivered a blueprint on how to do this. And I'll be talking obviously a lot more about that. The second part of our strategy is exploration. So we acquired an amazing set of tenements with the Wim Creek project. And in parallel with rolling out the development of Wim Creek, we will be exploring. More on that a little bit later. And then thirdly, and probably most importantly, this blueprint that we're developing is applicable to other projects. We plan to have a portfolio of projects in Anax, and we're certainly looking for other opportunities at the moment. Just a little bit about people. We've got a dedicated and an absolutely passionate team. When you're integrating new technology, developing mining projects is difficult anyway, but you've got to take it to the next level. The mining business is particularly tough on technology, and we've been in this space for several years, and we've built up a team of geologists, engineers, environmental specialists, and financial specialists. And this dedicated team is taking us forward. We've got a very experienced board. Just in terms of capital structure, we've got 350 million shares out there, a market cap of about 30 million. At the end of last quarter, we had about 7 million and just under 7 million in the bank. We've got listed investments worth about 4 million. And our top 5 shareholders control about 40% of our register. All right, so here we go. This is the engine room. So I'll just outline what we're doing and then tell you how we deliver such leverage from it. So open pit mining from the old existing pits at Wim Creek. Wim Creek was mined back in the early 2000s by Straits Resources. They mined the oxides and they left all the sulfides behind. And we expect to mine a great volume of those remaining sulfides. So simple open pit mining. The material goes through a crushing circuit, would be the refurbished crushing circuits that's there, through a set of ore sorting plants. And in the primary ore sorting circuits, we're able to strip out, effectively cherry pick the best material. And along with a parallel gravity circuit for the fine material, we're able to deliver high-grade material to a much reduced scale concentrator. The rejects from the first stage sort go to a second stage sort. In the second stage sort, we strip out the remaining metals and they go onto the existing heap leach infrastructure. So we're making use of all of the infrastructure that's available. And finally, we end up with essentially what are benign aggregates. These benign aggregates can be used for sheeting, road base, or possibly even sold. So what are we doing here? We're cherry picking. We're using the natural variability within the ore body, and we're cherry picking the best material. We're putting that through the high energy intensity concentrator. We're then stripping out the, I guess what you'd call a lower grade halo that goes into a lower energy intensive heap leach using natural bugs. And probably the best way to explain this is if we're mining at round about a 2% copper equivalent, we deliver to the concentrator at about 3.8% copper equivalent. So we've shrunk the material down by nearly 50% and increased the grade. And then, as I say, the lower grade halo between 0.5 and 1% goes onto the heap leach. We have a second crack at it to extract the remaining metals. And then finally, you have the low grade aggregates. So we're decoupling mining and processing. We shrink down the scale of the processing infrastructure. This is how we can contain the upfront capital development costs. So just a little bit more on the project. You can see in the pictures here, that's the Mont Capri pit, which, as I said, was mined back in about 2003 by Straits. We'll be able to get in there, virtually no dewatering required, and we get in and mine the sulfides. They're exposed virtually at surface. Crushing infrastructure, and then you can see the heap leach infrastructure, the ponds, which we've been doing major works on over the last year, upgrading those in preparation for relicensing of the site. Just to run you through the numbers again, 33,000 ton a year, 33,000 tons of copper delivered, 62,000 tons, this is life of mine, 62,000 tons of zinc, and just under 20,000 tons of lead. So circa 10,000 ton a year of copper equivalent over a 6-year mine life. And again, I just want to highlight, so $52 million capital development, delivering in the region of 200 million in free cash, which at current prices rises up to about 300 million. Now, not only does the technology and strategy that we're following provide highly leveraged financial outcomes, but it also delivers fantastic environmental outcomes. Because we're able to shrink the material down, we can reduce our tailings production by 50%. We can dramatically reduce the power that's consumed because we're halving the volume of material that goes into the concentrator. So just to give you an idea of where we sit in the curve of that, currently copper production, the average mined grade is around about 0.5%. We'll be feeding our concentrator at 3.8% copper equivalent. So nearly 8-fold what the average grade is. That means that our carbon footprint is reduced, perhaps not 8-fold, but close to. We're reducing the chemicals, we're reducing the water. So we've got real measurable steps in improving the environmental outcome and reducing our carbon footprint. So Our program going forward, as I mentioned, we are aiming to be in production within the next 18 months. Before I go through the details of that, I just want to step backwards a little bit. We acquired the project a year ago, almost exactly. And within this year, we've delivered a lot. We've delivered the scoping study. We've commenced a feasibility study. We've completed significant works on site, as is required to relicense the site. And not only that, but we've attracted the attention of Anglo American. We did a deal with Anglo American. They've agreed to provide 20 million US in funding, debt funding for the project, subject to the outcomes of the feasibility study. So it's been a big year for us. And obviously the next 18 months will continue on that way. So for the next 18 months, we're looking to deliver a full definitive feasibility study by the end of Q2 next year. That'll require some drilling, mainly engineering and metallurgy related drilling. We will at the same time be doing some exploration drilling, which is really exciting, and I'll talk about that in a second. We've kicked off all of the processes in terms of the approvals and relicensing, and we've completed a lot of work in that regard. So the aim is to complete the feasibility by the middle of next year, before the middle of next year, make a financial decision in the second half of next year, with the aim to be getting into production in 2023. So just a little bit about the exploration potential that we've got. You can see the dark grey tenements are the tenements that we acquired with Wim Creek. And we sit just to the west of De Grey and in amongst the Novo tenements, which are in pink. We sit in the granite greenstone belt in the Pilbara. And in fact, we span the width of the Wim Creek greenstone belt. So we've defined some really deep-seated structures running north-northeast along our tenement boundaries. And we've rolled out a 3D structural model. And most importantly, we've delivered a very comprehensive ultrafine geochem survey over much of the tenement package. There's still more to do. And as a result of that, we've identified some exciting anomalies that we plan to start drilling next year. So we were obviously chasing the base metals, which we found some near mine anomalies just to the north of Wim Creek and to the south of Mont Capri. But what we've also identified is a very substantial PGE anomaly down at Rochelles. We've also identified an interesting gold anomaly just to the east of our heap leach infrastructure. So those two will be certainly early ones in our drilling process next year. We've got a base metal anomaly just to the south of Mont Capri, and then yet another very substantial PGE anomaly up in the northwestern region of our tenure. So as you can see, there's certainly plenty to be getting on with, and it'll be a mix of looking to expand the base metals, but also chasing some of these pretty exciting precious metal anomalies. Just a little bit about the work that we've done on site. When we acquired Wim Creek, it was subject to an environmental protection notice. This is a very prescriptive tool that Department of Environment uses when a site requires some significant remediation. This had been served on site before we acquired it, and we acquired the site eyes wide open. We knew what had to be done, and what an EPN requires is to do certain development aspects or refurbishment of infrastructure. And so we've been systematically knocking those off. This includes refurbishing processing ponds, installing new monitoring bores, diversion bunds. And what you can see here is the major earthworks carried out at our environmental pond, which I'm very pleased to be able to say we finished up on Monday. The guys started demobilizing. We were on a very tight timeline. The cyclone season up in the Pilbara is almost upon us, but it's a very big milestone for us because it allows us to move forward to being able to get the site relicensed for production. So in conclusion, the three key elements when you think of Anax: near-term Pilbara production, highly leveraged outcomes, So 10,000 ton a year of copper production, a project that will deliver 200 million in free cash, low capital development cost of 52 million. We have exploration upside as well, which we'll be aggressively chasing. And then most importantly, we have the Anax blueprint, which we'll apply to other projects that we bring into the portfolio. It's all about technology. Technology has changed our lives in so many other ways. And mining, I think, is a bit slow in the uptake of technology. And we've certainly seen that as a huge opportunity for us. So thanks very much for your time, and come visit us at booth 59.
Try this one. Los Cerros MD Jason Stirbinskis has every reason to smile. From 7 million to 100 million market cap in 18 months, 20 million in the bank, a surface gold porphyry discovery consistently developing world-class results, and the gold price heading for the stratosphere. Jason joins us to talk about Los Cerros projects in Colombia. Welcome, Jason.
Thank you. Yeah, it's about March of 2020. We were 1.5 cents or thereabouts, and we're bouncing around 14 cents now. So it's been quite a journey. Good morning, everyone. We are entirely focused on the Mid-Cauca porphyry belt of Colombia. A big milestone for the company was June of this year. We were doing a virtual roadshow through North American institutionals, and one of the biggest of the precious metal funds put their hand up after the Zoom meeting and said we want 5% of that company. And a few hours later, another one of equal caliber said the same thing. So we went into a trading halt shortly after and took 5% or gave 5% to both of those North American precious metal funds and raised another 10 million in the Australian market and to some degree in the UK market as well. So we raised $20 million, and today we sit still with a significant amount of that, more than 20 million still. We're on the Mid-Cauca porphyry belt of Colombia. So if you can name a Colombian gold story, chances are it sits on the Mid-Cauca porphyry belt, from Buritica in the north, which is a truly once in a generation type discovery, a massive thing, through to La Colosa in the south, which, as the name suggests, is equally massive. And there's a density of discoveries around our two project areas, as you can see here. The density of discoveries is significant there. That's called a geological flat slab. It's a phenomenon you see elsewhere in the world where the subduction zone is not subducting as it normally does. It's flatter and you get a greater density of gold discoveries. And our two project areas sit right in that area. The Andes project and the Quinchilla project sit in this highly prospective flat slab area of the Mid-Cauca, which is itself a very prospective belt. Most of the activity has been in the Quinchilla area. And I put this slide in for the gram meters column, because it really shows the sort of results we're getting here. So all of these results are within about a 3 kilometer radius. So you can see Tesorito, Miraflores, and Dos Quebradas mentioned there. They're all within 3 kilometers of each other. And to give you an idea of how significant these results are globally, I put this result out in January, 320 meters at 1.5 grams per ton from surface. We put out in January, and it's still ranked in the top 10 drill results for any company anywhere in the world on the ASX till about June of this year. Then it fell off the top 10, but for the good 6 months of the year, it was in the top 10 drill results. And it wasn't our best, we had better. So as I said, the bulk of the activity and the momentum, the reason for the momentum behind the share price has been activity at Quinchilla. Quinchilla is a cluster of porphyry targets and to some degree epithermals, but mainly porphyry story. The geologists amongst you might automatically see there's a ring structure to it. There's a circle of structures there. The northern ones are less developed, although we do have Dos Quebradas with a 500,000 ounce resource sitting on it. The bulk of the activity has been in the south. So you can see Miraflores there, which is not a porphyry. It's a breccia pipe whose presumably its source is a porphyry, but we've never found that porphyry. And Tesorito, about 800 meters to the southeast, and then Cebal and Chuscal further south. Now the Miraflores has a DFS associated with it. It's a 500,000 ounce reserve, grading 3.3 gram per ton. And you can see at $1,400 US an ounce, it's a reasonably robust project economic profile. So of course at today's gold prices, it's presumably significantly better than that. But it's only a modest thing. It's 72 million capex to build 45,000 ounce per annum production. So it's not going to change the world, but it's a nice little earner. What might change the world is 800 meters away, a project called Tesorito. Now, this is an at-surface, high-grade porphyry discovery. So a unique combination of words there to find these things on the surface. Normally, to find porphyries, you've got to go hundreds of meters underground now because all the surface ones have been exposed and discovered. But this sits at the surface. Now, when we started drilling here, which was September of 2020, we had two historic results which were interesting. There was a 230 meter intercept at a gram per ton from surface and another at 386, I think it was, at a gram per ton from surface. And what was really important about those two drill results is they were perpendicular to each other. So it wasn't a desperate managing director drilling twice down a narrow vein to get good results. They were perpendicular to each other. So there was the potential for depth, width and length, or potential for significant volume. And then in September, we drilled our first hole, which is the 8th in the sequence, hole 8. And I probably included this one here. There we go, hole 8. And we got 230 meters at a gram per ton as well. And that was perpendicular to hole 2, which is also on the list there. And that allowed people to calculate potential volumes. And that was in September. We saw our share price go from 6 and 7 cents to 15 and so on. And that really changed the company's trajectory from that point on. It's a truly significant result and amazing progress. As it turns out, those 3 drill results from the beginning of the program aren't remarkable in terms of Tesorito. They are globally, but they're not remarkable in terms of Tesorito. We've now got, at last count, 16 holes greater than 200 meters, starting at surface, grading a gram per ton. There's 15 of them. So that's greater than 200 gram meters each time. And we've ranked in the top 10 several times this year on the top 10 drill results on a month-by-month basis. And I chose these holes of the good holes to show you because of the distribution. It's not like they're all concentrated in one little zone. We're getting these massive intercepts over 600 meters in this direction and 300 wide. So it's a very exciting project. We do see elevated copper at depth, which I'll go on elaborate on in a minute. But the one hole I do want to point out, because it is very significant, and you may have already picked it, this one. It's twice as big as every other hole, 629 meters grading 0.88 with 461 meters at 1.1 starting from surface. And the reason why that hole is twice as long as every other hole is because it went through twice as many porphyries. So it went through the usual process. This is the guy here. So it went through the high grade as they always do. We get 300 meters at a gram per ton and everyone's really excited by that. But rather than stopping at the western fault, which is normally defines the end of the system of interest, we kept on going and going and going for another 250 meters and drilled through another porphyry below this porphyry, well, to the side and below this porphyry. And that's why that hole in particular is twice as long, because, as I said, it went through twice as many porphyries. Now, keep that in mind, because the next slide puts that into context and why that's quite important. Sorry, I jumped a slide, quite an important slide, So this is Tesorito. That's where those now 50 odd holes have been drilled with all those spectacular results. Just in that little football on the western side there. Hole 16, that one I mentioned, the very long intercept, went through that football and into what's labeled here as Tesorito West, a second porphyry. And the reason we think that's there, or the reason we kept on drilling, because the geologists had this theory that we were sitting in a nested porphyry series. So we're sitting in like a string of pearls of porphyries. And that these porphyries were in an orientation that linked Miraflores, that's the 500,000 ounce reserve that we have, to Tesorito, suggesting that it is one system. And that's Miraflores there. Now, remember I said Miraflores is not a porphyry, it's a breccia pipe. It has a porphyry source, or presumably a porphyry source, but no one's ever found the porphyry source. And then the geologists come up with this model and say, well, if Miraflores is a breccia pipe and Tesorito is here, we've just defined Tesorito West, perhaps this is the structure, and this might explain the source of Miraflores. And then on the back of that, we commissioned some deep penetrating IP, so seeing down about 1 kilometre underground. And exactly where the geologist said we should get a massive conductivity chargeability high. We got a massive conductivity chargeability high. So these match up. So that's the mirrorflores in the cartoon. That's the reserve shapes in the mirrorflores model. These black lines are the drill traces that we've drilled through Tesorito. That's the IP response for the Tesorito discovery, that little mass there. And sure enough, joining them up, just as this cartoon would suggest, we got this huge chargeability high. Now, normally I would sort of dismiss geophysics. 9 times out of 10, it's something else, not what you're looking for. And it's a bit of a black art. But I put more credibility in this than I normally would, simply because it was the reverse way of doing the geophysics. The guys had a model, a geological model, and they said, if the model is correct, the geophysics would light up in this location. And it did. Sort of the reverse. Normally you get the geophysics response, and then the geologists get very creative trying to explain the story around why that happened. This is the reverse. The geologists had already had the idea, and the geophysics just demonstrated that we were on the right track. So we're very excited by this. Obviously, you can tell by the size of that anomaly that if that delivers mineralization of interest, then it's a massive game changer for us. Now, we've got a deep rig heading that way now. We'll be drilling that this year, that central pink zone this year. We have 5 rigs running at the moment, and well, 4 in this 5th one about to start and drill this big target. Of course, with the timing and being quite a deep hole, we won't have the results of that until probably February. Now, Sebal is another project. We just put some results out last week, I think it was. This, at the start of this year, was 2 stream sediments. That's all it was. There was nothing else there. No one had ever drilled this or walked over it or sampled it. It was just 2 stream sediments that were slightly anomalous. But the reason why we got so excited by this and progressed it through field mapping, field sampling, geophysics, drilling, we've drilled 6 holes here in the last 9 months, is because it has the same structural geological address as Tesorito. There are 3 things that led to Tesorito mineralization being where it is. It sits on a north-south fault, just like every other big discovery in the Mid-Colca. That north-south fault is cut by a northwesterly, a subsequent event that cut through it that allowed for more mobilization of fluids. And that's what we see at Tesorito. And you see that in the big discoveries of the Mid-Colca as well. And third, it's on a bend. So the fault actually had to bend, and it created more opportunities for mineralization to form. Those 3 things led to Tesorito. Those 3 things occur here at Sebal. So we said, well, let's advance this through the process. And every hole so far has delivered mineralization, 500 meters at 0.5 gram. That's the entire length of that hole. And 500 and plus meters. I've forgotten how big the other one was. 586 meters at 0.5 gram from surface as well. So it's similar lithology to what we see at Tesorito, and it's also similar sorts of intercepts to what we see in the northern third of Tesorito. So we're onto a porphyry here. We haven't hit the causative intrusive, that is the source of the porphyry mineralization. We didn't hit it here, but nor did we in the top third of Tesorito either. But we do have some geophysics we finished recently, and that's lit up 3 mag highs in the area. All 3 have target merit, so we'll be drilling those in the new year as well. And hopefully this will follow the same trajectory as Tesorito. Now onto the Andes project. This is a much larger portfolio. It's 8-9 times the size of the portfolio I was just talking about. It's about 70 kilometers to the north. But this is all early stage. It still sits in the Mid-Colca porphyry belt, so the prospectivity is spectacular. We've taken 14,000 surface samples here over the years, so a ridiculous number of surface samples. And 2% of that database is a gram per ton in soils. So in fact, that was the moment I became the managing directors, when they told me that, because you can't explain that away. You can't explain that as just being lucky and sampling a nugget. 2% of a database is a gram per ton in soil, parts per million, not parts per billion. So very exciting area. We'll get back here in 2022. Why Los Cerros? This says a lot. This is the project pipeline. It's the first time I've been the MD of a company that has a project pipeline that looks anything like we learnt at university. We're not exposed or reliant on the success of one project. We have a great number of projects, ranging from Miraflores with its reserve and its 800,000 ounce resource, Dos Quebradas with a 500,000 ounce resource. We're drilling at various targets, as you can see on the list there. Tesorito, we will go for a maiden resource in the first half of next year. to add to that inventory for Quinchia, and then a great number of early stage targets and greenfield opportunities at the far end of the pipeline there. Sebal was a nameless target sitting over here 9 months ago, and it's now up here and drilled. In terms of our ESG, look, I've got lots of wonderful things to say about what we do in Colombia. We take our social responsibilities very, very seriously, and we invest heavily. But I think that the biggest number, the biggest message is that there's 100 people in our company at the moment, and 98 of them are Colombians. So it's just me and the CFO that are here. Everybody else is Colombian and lives in Colombia. And the bulk of those people live in Quinchia, the small town near the project where we're active. And that's been amazing for us. It's been fantastic given the backdrop of COVID as well, because a lot of people have lost their jobs. And with our success, with $20 million in the bank and 5 rigs running, we've been able to create many, many jobs for the local community and employ them, which is why we're sitting at 98 people in the company, plus the mining teams, the drilling teams, and so on. So we've made a huge impact in a community that desperately needs it right now. We've also just recently been acknowledged as a finalist in the Social Economic Development Awards of Colombia for a particular project we did, making banana chips of all things, taking 16 women out of illegal mining operations and training them on how to run a business, making banana chips. So we were a finalist in that competition last week. So with 5 rigs running, $20 million in the bank, and a great number of targets to pursue, 2022 will hopefully be just as spectacular for us as 2021. Thanks for your time.
Paul Bennett is the Managing Director of Medallion Metals. Medallion is exploring for high-grade gold and copper at Ravensthorpe. Paul will update us on the progress of the company's 30,000 meters drill program and its plans to become a lifelong low-cost gold producer at Ravensthorpe. Welcome, Paul.
Thanks, Jerry. Thanks to the organisers and the sponsors and everyone who's in attendance. I do also want to acknowledge Argonaut, who's been a tremendous supporter of our business over a long period of time. They really get our business and what we're trying to achieve. So I thank them for that and hope that the relationship continues for a long period of time. Medallion's an advanced gold and copper explorer. We've got a portfolio of high quality assets in the southern goldfields of WA. Our aim is to build the project resources to 1.5 million ounces and beyond. And this is a presentation that overviews what the Medallion team's doing to make that aim a reality. The presentation's up on the ASX platform. It's a general update. It's not an offer. It's not advice. So we're competing for capital. We're competing for attention with a host of other gold explorers listed on the ASX and elsewhere. And I think these points, when they're taken together, are what set us apart from many of our peers. So we're a district scale opportunity in a tier 1 jurisdiction. We control 40 kilometres of stratigraphy that we know hosts the ore bodies we're looking for. The tenements are located 550 kilometres from Perth. The access, the infrastructure is outstanding. The community is supportive. It's had a long association with the resources sector that stretches back for over a century. We've got an established high-grade gold resource of almost 700,000 ounces. It's got a significant copper credit. It's shallowly drilled. It's open along strike. It's open at depth. It can and it is being expanded rapidly. We've de-risked the project to a significant extent. We're on granted mining leases. We've advanced the approvals. We're clear from a heritage perspective. We've completed a feasibility study on the project resources that demonstrates the project will produce high margin ounces. And we think that's a compelling argument to go and look for more of them. We're well funded. We're very active. We're in the midst of a 45,000 metre drill program that's designed to extend the known resources and test the regional targets. And all of this is being done with the strategic objective of establishing a long life, low cost gold business in Ravensthorpe. Now, there's a long way to go for us to get to that point, but we think the first critical threshold is to establish a critical mass of resources at the project. And in our view, that's 1.5 million ounces. The logic being, if half of that converts to the mine plan, that's 700,000 to 800,000 ounces in reserve. That's 100,000 ounces of gold production per annum. We think that's a bankable project in WA in this market, and we're very confident that the ground we've got can yield that metal endowment. This is a corporate overview. We completed a placement last week, $4.8 million, which will fund us into 2022. When the dust settles on that transaction, there'll be 196 million shares out. There's also 38 million options that have a weighted average strike price of 30 cents. That represents deferred capital of almost $11 million when they're in the money. We've got cash of 8.1 million, a loan obligation to our major shareholder of $4 million. That's only repayable on a change of control event or if we make a decision to build the project at Ravensthorpe. In terms of leadership, those names, they'll be well known to people who know the resources sector in WA. The bios are in the appendices. I won't go through them now, but suffice to say, we've assembled the requisite skills and experience to lead the business through the growth that we're going through at the moment. When this presentation was put together, we had a market cap of circa $40 million. When you adjust for the cash and the debt and the listed investment in Nickel Search, that backs out an EV of about $35 million, which translates to an EV per resource ounce of $50 an ounce. So over the full spectrum of ASX listed gold explorers that have got JORC compliant resources, that's probably par for the course. But if you get a little bit more selective about the peer group, and by selective, I mean ASX listed principal asset being gold in WA at a pre-production stage, then the mean and the median of the peer group pop up a bit. People are paying a premium for these assets. Now, we're down at the right-hand side of this curve. We don't like being there. It's extremely frustrating, but we can't whinge about it. The market has its reasons. All we can do is continue to deliver good drilling results into the market, building confidence that we're headed towards that threshold resource inventory that'll support a development one day. So as that happens, I think, and as that confidence builds, I think we'll begin to move to the left of this curve. And if you layer an increasing resource multiple on top of an underlying increasing resource base, then Medallion's compelling from a valuation point of view. Just focusing on our flagship asset, the Ravensthorpe Gold Project, we have the dominant land holding in the Phillips River mineral field. And critical to that are the Annabelle volcanics, which are located around the periphery of the Ravensthorpe tonalite. It's these rocks that have hosted all of the historic production and are host to the known resources and the known prospects. There's been about 130,000 ounces of gold and 20,000 tonnes of copper metal produced from this area over the journey from three main clusters of mines at Ravensthorpe in the north, down at Alverton on the eastern flank of the belt, and then down at the Cunditt Mining Centre, which is at the southern end of the field, just where the Archean dips beneath the Proterozoic. It's at the Cunditt Mining Centre that all the current resources are estimated. This is where the bulk of the activity, the bulk of the drilling, the bulk of the investment will go on in coming months, and it's where we expect the bulk of the resource growth to come from. There'll also be approximately 4,000 metres of drilling diverted to the regional targets at Meridian, at Old Greg and at Ariel. These are earlier stage, but potentially high impact targets, because if we demonstrate there's another mineralised system in the belt, then that'll underline the prospectivity of the district scale opportunity. We've reported preliminary results from the Meridian prospect last month. The highlight there was 5 metres at 11.4 grams gold, but just as important, we had multiple sulfides in the holes and anomalous gold in most of the holes over a 700 metre strike length. So we're very confident the Meridian's going to mature into a prospect that begins to deliver ounces into the inventory. And it's located 21 kilometres along strike from the Cunditt Mining Centre. So it does beg the question of what may lay in between. So focusing in on the Cunditt Mining Centre itself, we think that the project value, and by direct extension, the company's value, is levered to increases in the resource that lead to increases in the mine plan. So that means finding economic ounces. There's 674,000 ounces estimated within this mining lease boundary in the blue in the slide. 80% of that's in the indicated category. 92% of it is within 200 metres of surface. All of these lodes are open along strike. They're open at depth. Before we commenced the drill program in 2021, the average depth of drilling here was 85 metres. The deepest hole in the database was 300 metres below surface. So this is shallowly drilled for an Archean gold lode system. We're in the midst of an aggressive extensional drill program here that's designed to demonstrate these structures are open and continuous along long distances. We've reported approximately 100 holes out of a planned 160 hole program. All of the intercepts above 10 gram meters are highlighted in this slide. These are the high grades that'll drive the economics of the project. A significant amount of the drilling is outside the existing resource. And in addition to that, a significant portion of the drill program itself, roughly a third, is diamond drilling. So this is leading to a step change improvement in the understanding of the geology at Kundip. And this will provide a platform for us to launch next year's drilling program, which will have both extensional and infill components to it. This is the same image through Kundip. It's a long section looking to the west. Note the scale bar at the bottom of the slide. The drilling has essentially moved from the northern end of the system down to the south end of the system over time, over the 2.5 kilometres of strike length as we currently understand it. The funding that we've just put in place last week will enable us to continue the drills running through the new year and into the first part of 2022, but we'll cut off the data collection at the end of this year and then begin a process of re-estimating the resource, which we expect to report in March of 2022. If you think about, in addition to the known resources, that's our priority, which is to target extensions to those. There's also near mine opportunities, which relate to the areas where these lodes are projected to intersect. There's historic resources that have never been upgraded to JORC compliance, and there's substantial historic workings that have never had any drilling beneath them. So there are other opportunities that we're targeting here. If you think about the 75,000 ounces of gold that's been produced from this block historically, the existing resource, the extensions to that resource and the near mine opportunities, you can quickly map out a pathway to 1 million ounces of endowment within this block, all within 300 metres of surface and all within a 1.5 kilometre radius of where you'd locate a processing plant if you built a gold project here. I also want to touch on the depth extension. So as the resource currently stands, the ounce per vertical metre profile of that resource peaks at 5,000, 100 metres below surface. So that's where the data density is at its greatest at the moment. So we're adding data into the database, both along strike and at depth. And if that ounce per vertical metre profile can be maintained from surface to 500 metres, then this area starts to get really interesting in terms of its scale and significance. It's a great address with great potential. I want to draw an analogy at this point in time. We think Ravensthorpe has many similarities with Silver Lake's Deflector project, specifically as it relates to the mineralogy and more generally as it relates to scale. Now, Silver Lake has done an outstanding job demonstrating to the market the value of that asset, and it just seems to get better over time. Depending on whose research you read, the component value of Deflector inside the Silver Lake portfolio could be as much as $1 billion. So that's the size of the opportunity that's in front of us. If you look at the image on the left-hand side, that's a photo taken from an underground heading at Deflector in 2020. Immediately below it is some core recovered from Kundip in recent weeks. As you can see, very similar mineralogy, very similar host rocks. We've engaged GR Engineering to assist us with the met test work and the process route selection. GR's built the Deflector plant. They recently completed the upgrades and the enhancements to that process flow route there. They're very well placed to assist us in this regard. We think the flow sheet at Ravensthorpe will almost mirror Deflector exactly. Also on the slide on the right-hand side, I've graphed our resources as they stand at present, 674,000 ounces. Immediately beside it is Deflector as it stood in 2016. And very similar in overall magnitude, but a higher degree of certainty with Deflector, given the measured component there. Excuse me. That was the basis of the development decision at Deflector. And over the subsequent 5 years, they've just gone on to shoot the lights out. They've more than replaced resources. They've more than replaced reserves. They've produced in excess of 430,000 ounces of gold, a significant amount of copper, and most importantly, a ton of excess cash. So that's the kind of outcome, that's the kind of performance that we're striving to replicate at Medallion. I'll just touch on the corporate front. We're an asset-rich business and we're continuing to try and optimise the portfolio with two main objectives. One is to sharpen our focus on the gold and the copper opportunity. And secondly, we're looking to maximise the value of the non-core assets for our shareholders. So earlier in the year, we bought back a royalty over certain portions of the Ravensthorpe Gold Project. That was to increase the exposure of our shareholders to the regional exploration upside. Then there's the nickel. It was often overlooked or perhaps viewed as a liability associated with the historic RAV8 project. It made sense for us to get together with our neighbours AML, put the ground together and form Nickel Search. We've turned a $2 million liability on the balance sheet into a listed $3 million asset with a ton of upside. And we're very excited to see what $10 million cleverly deployed in that very prospective nickel ground can yield in terms of new discovery. And then last but not least, there's Jerta Cut-Up. This is over half of our tenure down at Ravensthorpe. The ground straddles the Proterozoic Mount Barron sediments. They've been demonstrated to be fertile for SEDEX deposits, as evidenced by the Trilogy deposit there with that significant metal inventory. SEDEX deposits make up over half the world's lead and zinc reserves, and they're known to cluster. We believe that the Jerta Cut-Up opportunity, the bedrock opportunity there, hasn't really been tested. And the best option for us here is to get this out on its own with its own management team, its own balance sheet to take it to the next level. So that's a work in progress. Watch this space. So we think, to wrap this up, we think Medallion's a compelling opportunity for investors who are looking for exposure to advanced gold and copper exploration in WA. We own assets with great potential in a great location. The business is well run. It's attractively priced relative to its peers. We're very well funded and we're very active in the region. The resource is continuing to grow every day as the drill program unfolds. The regional exploration opportunity, which is real and extensive, will be tested over coming weeks and months. And all of that's going to generate a positive pipeline of news flow that just reinforces that message that Ravensthorpe will support that critical mass of resources that will one day support a development. With that said, I encourage you, if you've got any more questions or you'd like any more information, come and see me at the booth today and tomorrow. Otherwise, get onto the website or send us an email at info@medallionmetals.com.au. We're always keen to talk about the project and what's unfolding at Ravensthorpe. Thanks for your time.
E79 Gold Mines has recently listed on the ASX with two large underexplored land holdings within highly endowed gold provinces within WA. Ned Summerhayes joins us to share news of the project with you. Welcome along, Ned.
Thank you. Thanks to the organisers for having us. Here's our normal disclaimer. So E79 is a new West Australian focused gold explorer. We're very much at the start of our journey. We listed in early October. We have good management that have a track record of discovery and development. We have good ground, so we've got sizable projects in prolific greenstone belts. We have a fairly proven strategy of using our money to explore and now putting our money in the ground. And the management have a history of delivering for shareholders. So the company is chaired by Chris Cairns, and Peter Ironside is in there as well. So they are ex-Integra and ex-Staveley. Those guys have a history of success with those. We have Deborah Lord, who's an experienced geologist. She comes to us also on the board of the Centre of Exploration Targeting for UWA, and Amanda Sparks is the company secretary. You can see our corporate information on the right there. So our share price, we have about $8.7 million in cash and $7.3 million enterprise value. So E79 has two large land holdings in world-class prolific greenstone belts. We have the Laverton South project in the Laverton tectonic zone and the Murchison project up in the Murchison goldfields. So if we focus in now on the Laverton South project, what we've got, you can see on the right, shaded in grey is the Laverton tectonic zone. This is a large structure. A lot of gold has come out of it. In the central and the north zone, you can see the world-class deposits of Granny Smith, Sunrise Dam, and Wallaby. relative to the north and the central parts, the southern area is quite underexplored. We think there's great value to be had down there. And while we say it is underexplored, it has had a number of million-ounce discoveries in the last 5 or 10 years, highlighted by the Bombora discovery by Breaker Resources and the Lake Rebecca Gold project by Apollo. So what exploration work has been done has certainly led to success. Within the Laverton South project, we have two areas that we're focusing on: the Lake Indana tenement, which is 100% owned by E79, and then we have a JV with St Barbara in the Pingen area. The Lake Indana really is a great opportunity, great exploration opportunity for the company. It was mapped as a granite, which is less prospective, and that led to just a lack of focus and a lack of exploration in the area. There's been about 65 drill holes on the tenement, and the tenement's 205 square kilometres. Of those 65 drill holes, less than half were assayed for gold. Remembering too that this is within the Laverton tectonic zone, a large, highly endowed area. So what drew us into this area was the fact that while it had been mapped as a granite, when we looked at the regional magnetics, we could see some lineations within there highlighted in green on the image that you can see. So this led us to think that perhaps it may have been mismapped, or that there's a greenstone belt hiding in there underneath. We did some work and looked at the historic drilling in the area, and lo and behold, we found dolerite, gabbro, gneiss, ultramafic, as well as granite in the logging. The central area where we found those holes were not assayed for gold. Sorry. So we had a fair inkling that there was a greenstone belt hidden within this project. We did some gravity work, and that also added further information to us, just to increase our confidence that we're in the right area. So we've got about a 25-kilometre long greenstone belt, underexplored. Within that, the gravity also showed some intrusions. So these have come up through the greenstone and just allow more targets and pressure shadows in favourable structural positions. So that will become a high priority target for E79. So by unearthing this new search space, really, we're just increasing our chances of discovery. The largest deposits in a new search area are typically found early because they have the largest footprint. While we're also in the Laverton South area, we have a JV with St Barbara. So this allows E79 to control the ground north and south of Apollo's Rebecca deposit, which is about 15 kilometres away from both sets of tenements. And also within that, we have the Trouser Legs deposit there as well. So we've got an active mine, a developing, well, hopefully soon to be developing mine, and then we've got the exploration ground to the north and south of these areas. One of the reasons that we quite like the JV is the ground has had numerous rounds of exploration in the past. So it's got enough data on there that St Barbara was able to do a comprehensive targeting and ranking program. And within that program, there are 4 priority targets within our tenements. These targets are mostly structural and stratigraphic, and you can see in the yellow, it's about a 15-kilometre long target zone. Within that zone but outside of our tenements, is Kogella's Gift, which drilled in 2011, hit 33 metres at 3.1 grams per tonne. So that's more evidence that this system it's a good target. It's shown to have high grades. It's shown to have thick mineralisation, and it's quite underexplored. The target 1 is kind of the bulk of that unit, which is a dolerite unit. It's about 10 kilometres long. The drilling that has been done has been early stage drilling, and it shows mineralisation at a number of key points along there. That drilling hasn't been followed up by modern drilling. Target 3, where we started drilling yesterday, we put out an ASX announcement this morning detailing that our drilling has commenced. So it's currently a 600 metre long by 300 metre wide zone of anomalous drilling. It's the northern extension of that dolerite unit. It's open to the south and it hasn't been followed up. We have about 8,000 metres of drilling we'd like to do there, and we probably won't get it completed by Christmas, but we'll finish it off in the new year, along with other projects forming about a 25,000 metre initial program. Target 4 is in the northern section of our tenements, of the JV ground. It looks to be just on the edge of a magnetic high. It's got mineralisation towards the end of the hole. When we did some gravity work there, we also found it's also on the edge of a large gravity low. So some historic work shows quite a long, 2-3 kilometre long soil anomaly on the western side, and that has now become a priority target for the company also. That's kind of where we are for Laverton South technically. In terms of kind of where we sit within other companies, you can see Apollo Consolidated in the pinky colour there, and their Lake Rebecca project. That's 1 million ounces within the 15-kilometre radius. Towards the edge of that 30-kilometre radius, we've got Breaker Resources and Carasoo Dam, and then St Barbara are still active in the region as well. So while we are a small newly listed company, there are some larger players in the region, and success for one helps success for all. Our other project is the Jungar Flats project in the Murchison area. Again, it's a large land holding. It's early stage exploration. The main kind of structure that we have is we have about 50 kilometres of the Big Bell Shear. So Big Bell deposit is probably the largest one in the region, and we're to the north of that. The area was explored by some large companies, BHP and Newcrest. They did their early stage work. They did their early stage targeting. They put the drill rig on there. They got some results, and then they didn't follow those results up. So that is a great win for us. There's information already there. There's targets already there. One of the things about that zone is it has an extensive hard pan cover, which just obscures the geology underneath when you're doing traditional soil sampling. So we'll look to use some innovative techniques developed by the CSIRO and hopefully have the ability to see through that hard pan cover and test our work up there. To aid in that testing, we've also commenced a large-scale gravity survey, which is underway at the moment and should be completed by Christmas time. So just an overview again, we have strong management, a strong technical management with a track record of discovery. We have ground, we have two sizable projects in prolific greenstone belts. Our strategy and the companies that this management have done before is putting money in the ground. There's no better way to explore than by testing the ground, and the management have a history of delivering value for shareholders. That's all I've got for today. We're there at the booth for the entire 2 days. I think all of our board are here. So if you have any questions, come along and ask.
Having recently JV'd the Canadian lithium assets out, Ardiden have refocused 100% of their attention onto district-scale Pickle Lake Gold Project in northwest Ontario. Ardiden's ground is situated among all of the major gold players in the areas, including Barrick, Newmont, Evolution, and Great Bear Resources. Everyone to shirk a challenge, MD Rob Longley is here to explain where the next big gold discovery is likely to come from at Pickle Lake. Welcome along, Rob.
Thanks, Jerry. And thanks to Stewie for putting on the 200th conference. We do hope, given the title of this one, Resurgence, the next big discovery, that in one of his future conferences, we will be announcing the next big discovery. That's what Ardiden is about at Pickle Lake. Quick disclaimer. Our investment proposition is fairly straightforward now. As Jerry alluded to, we've joint ventured our lithium out. So we've got the largest land holding in one of the most prolific mining regions of Ontario in Canada. We're set up for a 10,000 metre diamond project, which will start in January. We've got 22 different prospects and deposits across our land holding that have been vastly underexplored. We are, as you'll see in a few slides, in a really busy neighbourhood with explorers from Australia and Canada active in the region. What we've been working on for most of this year are some really solid foundations with our First Nation communities and with the Mines Department permitting. And we've got a highly experienced team to lead the exploration efforts, which will start in January, of which this morning we announced the appointment of a new non-executive chair in Bruce McFadzean. Hopefully there's a video there which will start. I'll come back to that. So as you can see, that's our board. Bruce, it's really great to have a mining engineer as the new leader of Ardiden. Bruce's history, many of you will know by putting together the Evolution story 10 years ago, and Bruce really knows what it takes to make a project and a company work. Bruce has spent some time looking at the technical aspects of the Pickle Lake Gold Project that Ardiden have, and I welcome any of you. He's in the crowd today and he'll be at the booth to come and talk to him about what he sees in Ardiden and how we've managed to really get ourselves ready for an aggressive exploration program starting in the new year. Neil will be staying on as non-executive director to assist Bruce. And we've got a really talented board and directors and team on the team now. So we've really got capacity to focus on the Pickle Lake Gold Project. On the left there, Angelo and Harrison are based in Thunder Bay. We've got a team on the ground doing the work, and Hayden and myself travel to and from Thunder Bay in Canada to manage the exploration on the ground. A quick snapshot of our corporate setup. Most interestingly, I guess in a way down the bottom here, is our cash position was $2 million at the last quarterly. What we have is an extra 1.75 in cash that came across from GT1 as they listed with our lithium assets. And we also have 9 million shares in GT1 as part of that deal, which is now worth about $3.5 million. Luke Cox is in the box next to us with Green Technology Metals, and that shareholding has earned about $80,000 a day in value since they listed 15 days ago. So we hope that continues in that vein, and we're getting that benefit from the lithium sector by being able to focus Ardiden totally on our gold project. Where are we situated? We are up here north of Thunder Bay alongside the Red Lake district, which has produced 30 million ounces since it began. We've got a massive 870 square kilometre continuous land holding out there. The Uchi Belt, greenstone belts here run east-west rather than north-south, as we're more familiar with in our own back garden, is prolific. Along that belt, you can see Evolution, Orteco are in here as well, Newmont, Barrick, and just north of us, Newmont have an operating gold mine at Musselwhite. For those of you watching the news, this is the Ring of Fire, which is owned by Naront, where BHP and Waialua are working out the strategy up there. That's getting quite remote up through there, but the infrastructure from Thunder Bay up to Pickle Lake and to Red Lake is very good. So there's some details there at the bottom about the lithium. I won't go too much into that because Luke can cover that in a talk this afternoon, but we've got a free carry interest, so we can really focus our attention on the gold. Our neighbours in the Pickle Lake region include Evolution Mining. You can see this large red stake holding down the bottom here was recently staked by Evolution. So they've moved across east from their Red Lake operations. All of this orange area is Ardiden's ground. So we own all of this and it's all connected. We've only just started doing a little bit of drilling at Casagiminus and at South Limb, but really the focus of our upcoming drilling is going to be on what we call the Western Hub out through here, where we've got a 50-kilometre stretch that has got one gold mine smack bang in the middle of it and no exploration done either side of it. In the area, we have First Mining Gold own the Pickle Crow mine in town of Pickle Lake, and Orteco are doing an earning arrangement on that. Just south of there There's a small TSX company called Metals Creek doing an earning on a Newmont property. There's another Barrick property in here, which has another TSX listed company doing an earning. So there's a lot of activity focusing in this region at the moment. And the most famous one in this region, which is what gives us real belief in the discovery potential of this region, is Great Bear Resources. If nobody's seen the story of Great Bear Resources, look them up. They're TSX listed GBR. They've gone from 20 cents to $20 in 2 years, and they've got no JORC resource out yet. It's anticipated to be out in the new year, but that is a brand new discovery just outside of Red Lake on everyone's doorstep, right under everyone's nose. And that's the nature of exploration in this area here. There's been very little systematic exploration. There's a lot of noise and a lot of results everywhere, but nobody's really put it all together and gone out and done systematic exploration to go after the big giants, which is what we're doing. That's a very busy picture of our land holding and the 22 prospects and deposits that I talked about. So green being sort of greenstone or green fields areas, which have almost no exploration. Some of these structures through here are 5 to 10 kilometres long, Rydell shear zones that are prospective that have never been explored. This is the focus of our exploration coming up through most of next year and the year after, we hope. But we've also got the along strike extensions of mines at Pickle Lake, Pickle Crow and the Central Fisher Mine. So we've got all these brownfields prospects and greenfields prospects right in the same place, aggregated into one package. But we do have a JORC resource at Casagiminus here of 110,000 ounces at a good grade, 4.3. And 456 grams is the general grade of mines operating in this region. And we've got the brownfields gold prospects there, Esker, which is our first target in the new year. And then we'll move on to some of those other ones. This is a geophysical picture of that Western Hub. And you can see in the middle, this is Barrick's Golden Patricia mine, which is a historic underground mine, which produced about 620,000 ounces at 15 grams. So our first drill program is targeted in here. We're permitted to start there in January. We've got a 3,000 metre program starting here. We'll then hop the other side of that and go along the north western stretch of that same structure. And we'll be testing the Dorothy Dobie deposit, where we have a non-JORC historical estimate of about 100,000 ounces at 5.8 grams. So a lot of old work that's never been followed up, which we're hoping to convert to JORC, step out and make new discoveries. What's important in this region, to make a new discovery, you've got to be in the right geological place. Great Bear Resources has an LP fault system behind it. We have a very similar system here called the Bearhead Fault System, which runs 50 kilometres. This is the feeder. This is a regional structure. As you'll see on a subsequent slide, having these deep-seated structures are really important to bring gold up to the surface. There's very little outcrop here, so it's almost impossible to see outcrop and to zone in on where you're going. So geophysics has been the key. And I think part of what Bruce has realised is we've done all that hard work, doing really high-detail geophysics, targeting with experts, and focusing our attention on where do we put the drill rig. This is the Esker property where we're going to be drilling in January. This is the Barrick underground mine. So we're directly along strike of that structure. There's a lot of noise here from previous explorers. So we're going to be drilling along this structure into this fold hinge, as well as when we finish that, we jump on the other side, then we'll come back based on the results here and follow up. So sort of a systematic drill, analyze, go back, drill more. Barrick own this polygon in the middle, but we've completely ring fenced them by pegging all the ground around the outside of it. And we're obviously speaking to Barrick about our opportunities in the area. That's a step out picture just to show you that once we finished at Esker, we'll be going up onto this structure where we've got that historical resource. This is a really long structure. We asked for choice as to where we go drilling through here. Part of that is through permitting process in Canada. In Canada, you need a permit to fry an egg, to get out of bed, to do everything. But with the 7 years of experience that we have in Canada is getting us through that. We've got people on the ground that get us through the permitting process. I talked about Great Bear Resources Dixie discovery. This is it down in the bottom here. One research report suggests there's going to be between 5 to 10 million ounce maiden resource come out of a 4-kilometre stretch through this. This is exactly the same geology that we have through our Western Hub. Mafics, felsics, a really important underlying shear zone, hinge zones, and a fault zone. When Great Bear started in here, they had about 14 or 15 different gold prospects which with a systematic drilling campaign has joined into one system. So that is a massive discovery. It comes back to why we think we're in a great place to make a new discovery out here, that nobody's had the time, the persistence, the stubbornness almost to persist with the permitting and get going in this area. We've done really detailed geological and structural interpretations. Ann Thompson's here and other specialists that really love this project. Go and pick her brains about it. There's a lot of noise in here that we're going to get to. This is showing you those deep structural, this is from state seismic that we're reprocessing at the moment. All of the gold mines here sit on these deep crustal faults. So this is looking to the west through a western limb, and this heads out to Red Lake, Great Bear Resources, Dixie project out through here. So 2D, 3D, working out what passive geophysics or other geophysics we can get on the ground that's smart, cost effective to de-risk our planning of our drilling. So geophysics really is lifting the veil on our targeting. It's the only way you can work out here. Just quickly back to, that was all the Western Hub. We still have another 3,000 metres budgeted and planned back closer to Pickle Lake Town itself at Casagunas, where we did some drilling last year. We've stepped back a little bit from Casagunas and said, okay, what's here? We've done some drilling. Is this the best place to be drilling? And we recognise some other structures in there which are perhaps prospective on a bigger scale. So again, we're looking big. There's a big package in it. You don't want to narrow everything into one little spot and overdrill a postage stamp area when you've got such a big package. So it'll be really great to have Bruce's focus on that as a mining engineer, because he knows what it takes to put this project together. So we're spreading ourselves out. All of this area through here is permitted. So being able to drill, being able to work in the area with First Nations comes down to your persistence with permitting. And it's been difficult during COVID, but we've got there. This is what the gold mines look like in vertical profile in the area. This is Red Lake. And I believe all the management of Evolution are out there at the moment. Cochin ore goes down about 2 kilometres. I believe they've got drill intercepts down at that depth. So once you get onto these things, they are big discoveries. This is where we've just done a little bit of drilling at Cass. So we really have just sort of scratched the surface of what's through here. These are the 4 gold mines at Pickle Lake region, which historically produced about 3 million ounces. So it's a gold producing area with historic gold mines that stopped because of the gold price, not because of any other factors. I talked a little bit about First Nation communities. This is our land package, and we've got 3 First Nation communities on either side of us. We're fully permitted with the Mishkigoggamang, and we're just at the point of getting Slate Falls and Cat Lake on board. There's some pictures here of, this is Angelo and Hayden meeting with the Mish, and this has been previously with some of the other First Nations in the area. So they need to get to know us and understand us and understand how we operate. That's the only way you've got a long tenure in this area. Our ECG principles are really strong. That's a large part of where we're focusing. That will be a full-time job, First Nation work, community engagement, but we're permitted. And that's what, again, coming back to why Bruce is here, he likes the fact that we've got to this stage, persisted through it. We're ready to drill. In terms of news flow coming up, we've been busy, even though we haven't been drilling in the December quarter. We've received our permits to start drilling at Esker. We've got First Nation agreements about signed. We've got a drill contract signed with a First Nation drill contractor, which helps as well for 12,000 metres. We started the JV with our friends at Green Technology Metals. We've received an extra 1.75 in cash and 9 million of their very valuable shares coming in. Thanks very much. And today we've appointed Bruce McFadden as our new chair. In the March quarter, it'll all be about drilling. We've got a strategy meeting probably next week, and it's going to be a pretty short meeting. It's going to be called Drill Baby Drill. That's about it. So the investment proposition is to look at Ardiden as gold focused, a large scale land holding in one of the best areas in Canada to be going looking for gold. We've got a 10,000 metre designed, ready to start in January, and 22 deposits and prospects identified through geophysics and historical work in the area. So a lot of work ahead. We're sorting out that permitting, First Nation relationships, and we've got others coming in the area. It's a very busy area now. It started at Red Lake, everyone's moving into Pickle Lake as well. And we're really glad to have Bruce on board, and we've got a highly experienced team to lead the exploration. So please do come to our booth and work out why Ardiden is a cheap buy at the moment. If you believe in gold, you want to go to a safe haven of gold, and work with a good team. Thanks very much.
One more presentation before morning tea. Venture Minerals is a successful exploration company leveraged to multiple commodities, and currently targeting ESG tin production at its Mount Lindesay project, one of the largest undeveloped tin projects in the world. We welcome Venture Minerals MD Andrew Radonjic, who will discuss this emerging EV metal, more versatile than you would think. Welcome, Andrew.
How are you, Jerry? Thank you again for having us here. Good morning, ladies and gentlemen. It's, like I said, it's great to be here presenting at the Resurgence conference, and thank you to Stewart, Jackson, Prue, and the team at Vertical Events for putting this event on today. I'd like to talk about Venture refocusing back on its flagship Mount Lindesay Tin Tungsten project on the west coast of Tasmania, and on Chalice's joint venture activities on the Southwest Nickel Copper PGE project here in WA. The advanced Mount Lindesay project has had over $35 million spent in it already. There's over 100,000 metres of diamond core drilling. We completed an open pit feasibility study in 2012. And as Jerry said, one of the largest undeveloped tin deposits in the world. The project is located in a tier 1 ESG hub with access to renewable energy, with hydropower, at a time when tin prices are at record highs of around $40,000 per tonne, which is over 4 times the price of copper. As I said, we've got over 100,000 metres of drilling. We're going to use that to leverage off the previous open pit study. We got over, which we completed back in 2012, but we're moving on to the recently announced underground feasibility study. And we'll talk a bit more about that. We've begun exploration, first time we've drilled since 2013. So pretty excited about that. We have 46 EM targets. The survey, first survey ever flown at Mount Lindesay back in 2019. First 2 targets were drilled. We've got instantaneous success there. So I'll talk more about that. Chalice is back on the ground. They've already defined some new EM anomalies with the work when they first started back just before the rain set in. So the crew was running a bit late from their work on the Julimar project. So they're currently doing more work on that as we speak, and we're looking for an update on that status to the market shortly. We had downhole EM targets at our Golden Grove North project. A year ago, we intersected up to 7% zinc. So we've got a huge downhole EM anomaly sitting underneath that drilling. And we've also added to our portfolio at Coolin, which is, if you look at a Jim Barding metamorphic belt, we're along strike from the Julimar. So we've got some layered intrusion targets there as well. It's worth exploring. There's our corporate snapshot. You can see that the share price has had its ups and downs over the last 12 months. And certainly part of that is due to the iron ore price. Also part of it is due to Chalice, I suppose, hitting the ground and then pressing the pause button in June, and then now to come back on the ground again. And obviously the drop in the iron ore prices had an impact. But in all that time, the tin has doubled in price. You can see quite a steady graph there. So certainly we feel as though as most junior explorers and developers are undervalued, but I think there's a good opportunity with tin and Chalice activities going forward. Here's the board. Lots of experience in not only in this part of the world, but we've been very fortunate that once we could get back and refocus on Mount Lindesay, that all that experience is still in-house. And switching on to Mount Lindesay. Now, for those of you who don't know the west coast of Tasmania, there's over 140 years of mining history in this area. Some of the best air leg miners that operate in WA's mine come from this part of the world. So they know underground mining. There's a Renaissance Bell tin mine, Australia's only tin mine. It's a world-class tin asset. It's been going 130 years. Rosebery VMS deposit, copper, lead, zinc. Hellier, Cleveland tin mine. Savage River, large open cut that's been operating and producing magnetite pellets at Port Ladder and shipping those for the last 50 years. This is a huge amount of history. I forgot about Mount Lyell. If you know about the New Century pickup just recently. So that's got 120 years of copper and gold mining there. So great amount of history. And the best part about it is the infrastructure, the hydro dams. One sits underneath here at Reese Dam, Bastion Dam. So we've already got hydro renewable energy sitting at our doorstep. So very, very well placed. Tin, for those of you who don't know much about tin, sit back and relax. I'm going to teach you a bit about it. It's tin is in solder. Obviously, work from home has just escalated the use of everything that's electric, mobile phones, laptops, anything that's got circuitry in it, it's got solder, and solder is 96% tin now. Tin's was back 10 years ago when the prices were in the low, it's around about $30,000 a ton. You know, it was pretty much about converting to lead-free solder. Now, that's only about 75% done, but the miniaturization was a threat. And that's what caused the tin price to go down. But I don't know about you, but mobile phones seem to be getting bigger. We seem to have more of them. And as we go into this green industrial revolution where we're going to electrify everything, then tin is going to go along for the ride. And you've seen the price. It's in electric vehicles, wind power, tin, copper, solar cells, energy storage in the anodes of lithium-ion as well as lead-acid batteries. So it's very synonymous with the future where it is going. So that's why the tin price is where it is today. And I can only see it getting higher. Like I said, we spoke a little bit about the other uses, 5G network. You know, as that gets rolled out, more circuitry required. 5 times as much tin in an electric vehicle as a fuel combustible vehicle. And tin keeps on getting added to the lithium ion and improving the storage capacity of those batteries going forward. So it's just what they call a spice metal. There's a little bit of tin in just about everything. Tin has been, and you know, well known throughout the world, and you find it's been produced in a lot of countries. But Wood Mackenzie in April this year said that 90% of the world's tin comes from high-risk jurisdictions: China, Indonesia, South America, Africa, Myanmar. These are all high-risk jurisdictions. No, very lax permitting, no rehabilitation. Here we are in Australia. Perfect opportunity venture has to become a tin producer and become one of the very few ESG compliant tin producers in the world. Australia is slowly waking up to this, but Europe's all over this already. And at Mount Lindesay, not only do we have tin, but we've also got tungsten, and tungsten is now a critical mineral as defined by the Australian government, along with all those other governments listed there. And tin is also on their list, but not yet on the Australian list. And we've hit tungsten back in 2008. So this intersection here, we go back to the announcement there of February the 14th, 2008, talked about magnetite and hit a little bit of scheelite. Well, actually hit a fair bit of scheelite. This is about twice the grade of King Island scheelite's tungsten only mine. So we've definitely got a significant portion of tungsten. If you don't know about tungsten, tungsten carbide, drill bits, armor plating, armor piercing, it's in semiconductors, the world shortage of that. China dominates this. It's like a rare earth, and the US and Europe are keen to get access to this product. So again, Mount Lindesay is well positioned. There's also a $2 billion loan facility for critical minerals being put out by the federal government in September. We're looking to tap into that. And sort of the capex we're looking at is well and truly sort of around that sort of $50 to $60 million mark to build this project. So I think that's a good opportunity for us to get that funding for for Mount Lindesay going forward. Touching on that, like I said, we're in the EV metal space, critical mineral space with Mount Lindesay, 80,000 tonnes of tin metals in JORC compliant resources, about 70% measured and indicated. This is already done, drilled, you know, well and truly. There's about a third of a King Island project sitting in amongst our ore body, and about 15% of it mass rock is magnetite, which we can produce a magnetite concentrate like Savage River. So this project is very economic. The intersection we just got the other day, 93 meters at 0.3 tin, 0.2 tungsten, 15% mass recovery magnetite, and nearly 0.1% copper, is $300 a ton dirt after recovery. That's underground dirt. So make no mistake, this is an underground ore body. You can see some of those intersections there. If I convert that to copper, that's about, you know, just under 11% copper. So if you think about it from that perspective, you may start to understand the value of this project. Now, like I said, tins are at record highs. Tungsten's gone for a bit of a run as well, quite steadily going up to what is $315 per 10 kilogram unit of tungsten trioxide. We've got sensational exploration upside, which I've touched on previously, but we are in a Premier 10 district. And like I said before, we are in a Tier 1 ESG hub. A little bit about, there's exploration now as we talk about that. And you can see here's Renison. We're about a dozen kilometres along strike from there. You can see a previous intersection at Deep Wilson, 17 metres at 2% tin or 8% copper, if you convert it to the copper equivalent. But when you look at this, first hole we drilled along strike from Renison and the Renison mine sequence, which is this pink zone here. Alluvial tin field mined 100 years ago. Gossan with tin in it, sitting at the surface, likewise 100 years ago. We drilled underneath that, got 500,000 tonnes at 0.9% tin, straight tin. But this very first hole, and these holes were drilled back the other way, the wrong way, we got scar mineralisation. Very good indicator we're near ore grade intersections. We then drilled along strike to the number 2 skarn, part of Mount Lindsay, got pyroxene skarn, which is in the halo of the ore grade as we know at Mount Lindsay. So 2 holes, two immediate successes. Like I said, there's another 46 of these targets still to drill. So the exploration potential has never been really focused on. We're too busy drilling out the Mount Lindsay deposit. So it's a pretty exciting opportunity. And that's the hole we drilled, we announced a couple of weeks ago. There's a scheelite. The cassiterite's in the tray before disseminated cassiterite. They're virtually intermixed together, the ore body with the magnetite. So it's really a treasure trove of money to be made in this asset. So I'll just touch on Julimar for the rest of the presentation. But for those who don't know, we have a $3.7 million joint venture to earn 70% with Chalice. And this occurred back probably a few months after the exploration. We got a knock at the door. So we wouldn't mind having a look at your project. And said at that stage, we're focusing on building the iron ore project. So we had a whole bunch of EM anomalies. It was going to cost us a fair bit to drill. So we were happy to do a JV. And when you look at this image here, you'll probably see why. That's the airborne magnetics. That's Julimar to the left. That's Tor to the right. If you throw the EM on that, you can see that there's a 6.5 kilometres EM targets. It's advanced more since then. We had these airborne targets here, and with this massive sulfide intersection from 2018. This is 18 months before Julimar was discovered. So they immediately recognised potential of this. We had some, a copper company come and look at this, their geological team. We couldn't work out, because we're looking for a VMS. We're looking for copper, lead, zinc, like Teck had discovered not far from us. And we were a little bit confused by this nickel and cobalt and palladium was in there, and couldn't quite work out the geological model, but very clearly our friends at Chalice had. Now, it's, the ground EM's happening at the moment. We're going to get more results. I'll just click back there for a sec. And we're going to get conductors. There's no doubt about that. So what's going to happen is they'll spend the $300,000. We'll hear about that in the next few days. They'll announce the results, and then I'll make a decision to drill. They'll need to drill before the rain set in down in Manjimup. It's a phytophthora zone, so in the state forest. So they've got $900,000 to spend basically before beginning of June. So certainly we're seeing a pretty exciting next 6 months or first half of 2022 as Chalice explored a Julimar lookalike, as stated in their announcement of 21st of July 2020, not by us, of this target. So look forward to those results. So the value proposition in this company, it's all about tin, tungsten project at Mount Lindsay. We're developed. We've already spent $35 million in this. Right time to develop an EV asset. Tin hasn't had its real run yet. The slide you've probably seen 1,000 times is that tin's rated above lithium and cobalt in terms of demand of metals going forward in new technology. We're in an ESG compliant area. We've got permitting. We're going to rehabilitate. We're going to put all our tailings back down the hole. We're going to put all our waste. This will be a very low footprint mine. We'll use battery electric equipment. We've got Dale Elphinson's major shareholder. He'll be developing that in the next generation of batteries. Then we are the only ASX company exploring for a new tin deposit. We're in a premier district and the chances of success are extremely high, you must agree. Chalice, $3.5 billion company exploring on our ground Our market cap's something like 60 to 70 million dollars, was 200. That's really the obvious opportunity for investors going forward. So hang on and watch that activity going forward. I haven't spoken much about the other assets we've got in the exploration field, but we're north of Golden Grove North, that's 29 metals. Got a great EM target there to drill, and we've got what looks like a very interesting proposition in Coolin. Again, we've got the extension of the Jimbardi metamorphic belts going straight towards our Coolin property. We've hit a gold hole. There's no hole there for 40 kilometres, and we hit gold 18 metres at 0.6 down 250 metres. And we've also got near surface nickel, palladium, platinum, palladium, and cobalt intersection from 25 metre deep holes drilled by a private company about 10 years ago, less than 25 metres deep. So we're going to do the airborne EM and see what targets we can get out of that. Thank you.
Now, don't rush. I've got some exciting news for you. Today, we are offering you the opportunity to win a brand new 35-litre Yeti Esky. It's not an empty Esky. It is filled with selected Spinifex Brewing Company beers, which is probably worth more than the Esky itself. I don't know. So the door prize will be, the news of the door prize will be released on their website. All you've got to do is to go to their booth, which is just inside the exhibition door, and scan the QR boards and register for a chance to win that prize, which will be announced tomorrow evening at 3 p.m. Or is it, what day is today? Wednesday. So it is tomorrow at 3 p.m. So go check it out. An Esky full of beer, not just any beer, Spinifex beer, 35-litre Esky, just in time for the start of the summer season. Go the 4th to morning tea.